everyone, welcome to this episode of UK Unlocked 21 series focusing on India-UK relations. Today with us we have three distinguished speakers tackling the topic of India as a trading partner, gauging the UK's investor sentiment. Please allow me to introduce our speakers. We have with us Mr. Suneeth Katarki, who's the founding member and senior partner of IndusLaw. Mr. Katarki has extensive experience in both domestic and cross-border M&A and private equity investments. We also have with us Mr. Fabrizio Carpanini, who's a partner in the London office of the law firm Dorsey Whitney. Mr. Carpanini heads up the firm's London and Continental Private Equity Group, and he also advises clients investing in the UK, Europe, as well as the US. Last but not the least, we have Mr. Kevin McCole, who's the Managing Director of UK India Business Council. The UKIBC, as many of you will know, is a non-profit organisation whose aim is to strengthen trade and business relations between the UK and India. Recent reports have highlighted the growing business and political relationship between India and the UK. In view of this, the first question that I'd like to ask the panel is what are their thoughts on the main factors that attract UK companies to India? Mr. McCole, recently you wrote an article on a bright future for the UK-India trade and investment relationship, where you were very positive on future trade relations between the two countries. Please would you elaborate on this for our viewers?
Thank you very much, Anna Mitra. It's a big question. The UK-India trade and investment relationship is a big topic. Look, I think UK companies are drawn to India for a wide range of reasons. India is a big market. I think it was HSBC recently predicted that India will become the third biggest market in the world, probably by 2030. GDP per capita rates are increasing, so that consumer market is growing in India, and UK companies recognise this and they want to be active in the market. I think UK companies also recognise that there is a real complementarity between the UK and India. Make in India, or Atmanirbhar Bharat, as Mr. Modi launched this Atmanirbhar Bharat campaign this year. For these to become a reality, a partnership with the UK is going to be really important for India, because the UK has got that R&D expertise and those advanced technologies that will help India become a self-reliant manufacturing force to be reckoned with, a supply chain hub for the world. So that UK-India complementarity will be critical for India to achieve its economic objectives. And I think, as you touched on in your opening remarks, UK businesses recognise that India is improving in terms of the ease of doing business. Every year since 2015, when the UKIBC first started surveying companies, more than 50% of UK companies every year say that it is getting easier to do business in India. Not many of them say that it's easy to do business in India. That's not the message, but they recognise that great steps have been taken by governments across the country, both at the central and the state level, to make things easier, to improve the operating environment. So I'm very hopeful for the future, because the Indian market is developing, it's getting easier to do business, and more UK companies are looking at India and seeing that complementarity where they can really partner for the benefit of both countries.
Actually, if I can rephrase the question slightly, and rather than provide an overview, it might be of more interest to our viewers to just hear a few specific examples relating to recent work that I have been doing advising UK and indeed North American clients who are investing or are already invested in India. I won't mention any names for obvious reasons, but in fact, before I do that, let me take you to 2014 to give you a real example of where a development in technology actually, some would say, was instrumental in Prime Minister Modi's election in India. as a client of mine here in the UK had developed a technology around projecting 3D holograms, which Prime Minister Modi and his associates decided was absolutely essential in terms of his election campaign, such that he was able to appear simultaneously across different states as a hologram and give the same speech to everybody in a way that made it appear that he was actually there with them. Some say that it was quite instrumental in helping him to victory. Who knows? But that was UK based R&D and technology, obviously for that specific reason, imported into India, but which has had no doubt quite a lasting impact given his election win. But turning to other things, to other businesses that I've recently been advising, and in fact I'm working with IndusLaw at the moment on a specific transaction in the engineering sector, which I think highlights precisely the point, which is, why is India attractive? The Canadian and UK company is acquiring a business in India. And the reason it's acquiring the business in India is because not only is it a lower cost base in terms of manufacturing, but through their due diligence, they've established that the India business has the expertise and the management to be able to move a vast amount of the existing production facility from the UK and Canada into India. And I think that highlights that India continues to offer a sophisticated and well-trained labor force.
Thank you, Amit. And I think Kevin has very nicely touched upon the key things that concern UK India. Specifically from an India perspective, obviously the size of the economy, the potential of the market is a big factor, and everyone wants to be in India because it's touted as the next big thing. There are possibly geopolitical reasons too. I mean, there are a lot of countries that believe that they can't rely only on China to be their manufacturing base. They want to have another manufacturing base, and India potentially could be that next manufacturing base for a lot of companies in the world, including the UK. Apart from these two, I think there is tremendous sort of revolution happening on the digital front, on the in India, on the fintech front. There's a lot of opportunities, therefore, to exploit the new age businesses in India. Beyond this, I think Kevin referred to the Atmanirbhar Bharat, but there are a lot of other sort of similar schemes such as Make in India initiative, the Startup India initiative. And all of these, I think, also provide huge opportunities for companies all over the world, including the UK companies.
Thank you very much to our panel for providing such informative responses to this question. For question number 2, I'd like the panel to provide their views on the question that whether addressing trade and investment barriers is key to ensuring that a free trade agreement can be achieved between India and the UK, and what they think will be the key priorities when it comes to improving trade relations between the two countries. Mr. McCole, would you be able to take this question first and provide your views?
Of course I can, thank you very much. I think that the UK-India investment relationship is phenomenal, and there's, the UK, I think, is one of the top G20 investors in India, has been for the whole of the 21st century. India is one of the major investors in the UK. I think in 2019, it was the second biggest source of FDI into the UK. So the investment relationship is really strong, but the trading relationship is not so strong. And I think the reason for that is not through lack of appetite on both sides, but I do think there are some barriers to trade that is keeping the trade relationship below its potential. Now, and I think if we can address those trade barriers, there's a huge prize for both countries. I think the UK and India are currently the 5th and 6th biggest economies in the world. There's great complementarity between them. So there's a big prize to go for there. Now, back in July, at the ministerial JETCO bilateral between Secretary of State Liz Truss and Commerce Minister Piyush Goyal, the governments flagged that there would be an enhanced trade partnership as part of a journey towards a free trade agreement. And I think we can expect to hear more on this when Boris Johnson is in India in January. Now, I really like the approach that the government's described back in July and since then. And that approach is pragmatic, incremental, and at the same time ambitious. It focuses hard on ease of doing business and addressing barriers to trade in the immediate to medium term. And these immediate and medium term measures would help establish confidence on both sides and build that momentum that would be required to get to a fuller free trade agreement. And as well as building confidence and momentum, I think addressing immediate barriers is really what businesses are looking for. The majority of businesses are looking for that immediate action on ease of doing business and immediate problem solving. But there are, though, UK and Indian businesses that would like to see a trade deal that addresses tariffs sooner rather than later. For example, Indian textiles companies would like tariff reductions to the levels enjoyed by Bangladesh and Sri Lanka. The Indian industry feels that would help them compete on a more level basis with their South Asian counterparts. And looking at it from UK into India, UK spirits companies would like to see India reduce its tariffs, which are a staggering 150%. To import Scotch into India, it's a 150% tariff. And indeed, Indian spirits manufacturers want to see that tariff reduced as well, because they import bulk Scotch whisky, then they put it into the Indian-made liquors. So this one tariff reduction, I think that would benefit UK industry, it would benefit Indian industry, and it would benefit Indian consumers who would be able to enjoy a wider range of quality products at a lower price. Now, this enhanced trade partnership, I think is really important that the governments prioritise looking at standards and regulatory equivalence, because alongside tariffs, getting standards aligned and regulations aligned, these are what will really make a difference to help more SMEs to trade internationally. And sort of a final thought on a priority for the enhanced trade partnership is that it should be future-proofed. We're now in an increasingly digital world, a world where also goods supply chains are increasingly regional rather than global. And it's clear that IP-rich innovations, technology transfer, and digital services are going to drive the future trading relationship between the UK and India. So I think it's really important that issues like intellectual property, digital services, and of course sustainability are central to any future free trade deal that the UK and India does.
A couple of general points that I'll make, and then maybe talk a couple of more specific in relation to law. Generally speaking, the COVID world has made everyone sort of look inwards. It's become this thing to say, we've got to be self-reliant, trading is less important than making sure that we can sustain ourselves as a nation. But I think that approach needs to change. We need to go back to thinking of ourselves as a part of the global economy. And I think every country needs to do that. It's impossible to be an island. Certain things like Atmanirbhar Bharat, while they have some laudable objectives, they should not come in the way of ensuring that you are increasing trade with countries. So that's one point I just wanted to make. I think there is also a sort of fear in India that, look, free trade agreement means lowering tariffs across sectors, and India will be flooded with a lot of cars from UK, and probably a lot of single malts and wines from UK and the rest of Europe. So that's something that we need to keep in mind, that look, we have to approach this holistically. We have to look at everything, not just about goods. As Kevin mentioned, there is great advantage for India if you look at textiles and garments and maybe leather products, etc. But the approach should be holistic. How do we look at every element of trade and economic activity between the two countries? How can we sort of keep services in mind? How can we keep investment in mind? And look at the holistic picture, and then try and see how we can sort of partner together. I think in that regard, important changes like creating a data privacy law. We have modeled a law which is very similar to the EU GDPR law, and that should be very comforting to UK, and that will allow us to sort of increasingly access and for data to flow between the two countries. And in today's world, that's really half the battle won. I think UK needs to do more, and it has been doing more now in terms of enabling more professional services from India, in terms of, relaxing the visa regulations, work permits, and so on and so forth. And that sort of means that the Indian software services industry and other services industry get a sort of fillip in terms of doing more with UK. So some of these changes with the law and some of us looking at things holistically, I think will be the key to sort of improving and expanding our trade relationships.
Thank you very much to Mr. McCole and Mr. Katarki for providing the response. In the last segment of this session, we've already touched that there are some obstacles which is currently facing India, which is affecting her reputation as being a viable trading partner. I'd like the panel to provide a response on the current practical and legal barriers which they feel hinder the flow of UK investment into India, and how these challenges can be overcome. Mr. Katarki, given your extensive experience in cross-border corporate transactions, are you able to share any experiences and thoughts on some of the challenges which you may have come across and India is facing when it comes to getting more exposure to foreign investment?
And some of the specific things with a couple of examples of, concerns that transactions have had while people have tried to acquire companies or invest in India. So broadly, I think one of the key things that we need to sort of project to the world is that we are a very stable democracy with mature institutions and a very stable regime in terms of the law. I think one thing that we still don't get right is that we do make quite a few sudden and ad hoc changes to the law, which is something that always worries any global investor, right? You suddenly had the Supreme Court in India say that diesel cars are banned in the National Capital Region. I mean, that's still 25% of the market, and you don't do that to the car industry overnight, telling them you can't sell these kind of cars. So, you had something similar with our demonetization. You also had something similar by our central bank, the Reserve Bank, when it said that all financial data has to be local, and without giving a sort of kind of time frame to comply with these things. And banks were scampering around to sort of make sure that they couldn't comply with this data. So some of these things, need to be done in a thought through manner with time given to the industry to sort of comply with the law and not do it too suddenly and something which is too ad hoc. That's one. I think similarly, certainty in taxation is important. People are still looking at our Vodafone case. We've still not put that to bed. Hopefully we'll put that to bed soon. But the lack of certainty in our tax is a worrisome factor, and people are still worried about it. So that's something we should be careful about. We should be careful that we don't sort of do retrospective changes in our tax law, taxing transactions or events that have happened before. So that's something which is a clear no-no, and we should definitely get better at that. I think the other thing that we should get better at is our enforcement. Courts take a humongous amount of time. It's a matter of years, 7, 8, 10 years sometimes for decisions. While commercially parties try to protect themselves by having arbitration outside India, Singapore is a preferred jurisdiction, Hong Kong, London, whatever. But it's not always about contractual obligations. You may want to enforce your trademark, right, because somebody is infringing your brand name. You may have some breach of confidential information happening. You may want to enforce a non-compete. You may not have arbitration agreements there. So you need to obviously be able to access Indian courts, get favorable orders, make sure that your interests are not affected and in fact are protected in a timely manner. I think that's still a big challenge in India. So that's something that we need to take care of. Another thing that we need to take care of, I think Kevin briefly mentioned about various states and the tax laws and the various different laws we have when it comes to different states. India is a large country, and we do have a lot of states, but some amount of uniformity in some of these laws would be helpful, especially, for example, labor laws. While certain industries, it's still going to be a challenge to get a uniform law across certain industries and sectors. At least some of the general laws, such as labor laws, I think need to be made uniform and simplified. I think there are some efforts underway to do that, but that's an area of challenge still for anybody coming outside India. Specifically on transactions, and I have seen clients who want to acquire companies in India sometimes struggle. Our foreign exchange regulations are still very archaic. If somebody wants to do an acquisition, for example, one of my US clients was looking to acquire a company in India, and the deal was very simple. It is a listed company in US, and they just wanted to give stock for buying the stock of the Indian company shareholders. And funnily, unfortunately, it is not something that is possible under Indian law without getting approvals. You need to go to the central bank, get an approval for it, which sometimes takes months. In fact, you may not even get it. Tax-wise, it's extremely inefficient because you're getting stock there, which immediately gets taxed today with you. Being able to sort of acquire by way of a merger is something that's much harder when you're merging a company outside India with a company in India. So those are things that are a challenge. And sometimes, there are also things like, there's another transaction actually with a UK company where the transaction was fairly simple. There was an X $1 million that was agreed to be the purchase price. The only thing they said was some of the payment will be staggered because there was an expectation that the selling shareholders, who included some promoters, will continue in the company and continue as the management of the company. And staggered payment of consideration is something that is again not allowed in India. You can only do 25% as deferred consideration. You can't defer consideration beyond that. So some simple sort of transactions where you're not talking about large number of listed shareholders. You're talking about a private company with 5 shareholders, including that had 3 private equity funds. Sophisticated sellers. The buyer is a sophisticated person. That's not an area that the law really needs to get into, but you have laws there which prevent certain things like this that happen, and that makes a deal making pretty hard in India. Today's sophisticated deal making is never going to be about, here is the money, give me the shares. There's going to be various sort of nuances around deals, and you've got to allow parties to sort of have those nuances and let them do deals, and that's something that's still a challenge. So these are some of the issues that we face in India. There are many more, but I think these are probably some of the key ones.
Thank you, Mr. Katarki, for your response. Mr. Carpanini, are you able to provide a response to this question, but from a UK perspective, and whether you've come across any legal barriers in respect of foreign companies who are trying to invest in India?
Yes. I'd like to start by maybe on a positive note, which is that over the last few years, I've done several transactions involving India, where non-Indian investors have been predominantly buying assets and businesses in India. And I have to say that there has been progress. When I compare with, say, 5 years ago on a particular transaction that I have in mind, with a transaction that I'm currently working on, things are easier and a little more straightforward. So that emphasizes the fact that progress can be made and is being made. That said, as we've heard from other speakers, there are still a number of issues that come to the fore when advising non-Indian investors buying businesses in India. I'm going to start by focusing on a private equity situation where we have non-Indian private equity funds that are looking to acquire businesses in India. And whilst I know that there have been some recent taxation relaxation for sovereign wealth funds, where I believe that if a sovereign wealth fund is looking to invest in infrastructure projects in India, there is now, as I understand it, a 100% relaxation in terms of taxation, which is obviously a terrific incentive to attract those sovereign wealth funds. But when we talk about private equity sponsors that are investing monies from insurance companies and the like, legislation such as the one that I think Suneeth touched on in terms of foreign direct investment that is thrown out there without any real consideration to the detail behind it can become quite a significant obstacle. So in the context of a private equity fund, which, as many of you will know, gathers its investment funds from all over the globe, to actually face a situation where India, at the outset of the pandemic, decided that it would place foreign direct investment restrictions on all of the neighboring countries to India, that was extremely unhelpful, because what it meant was that we needed to conduct a detailed analysis of the private equity fund to find out whether any of the limited partners, whether any of the investors actually were cited in any of those territories. And it may have been that they had a very small percentage, but that could have actually upset the whole transaction. And when we tried and pushed to get clarity on what was actually meant, was this new legislation, were these new regulations designed to capture an investor from China with a possibly 1 or 2% interest in the private equity fund from being allowed to be part of this new transaction? We were met with a wall of silence, because nobody could actually tell us what the regulation actually meant. So I suppose that's a real example of where the need for regulation is understood, but clarity in terms of the rules within which business must operate is really important. I think the other point I'd like to mention is the general bureaucracy that unfortunately still surrounds a lot of the and that businesses face when they come to invest in India. I find that clients of mine, non-Indian clients, become slightly exacerbated by the fact that there's a huge amount of form filling, forms that need to be notarized, forms that have to be produced with wet ink signatures, PDFs are not allowed. I think India needs to move itself into this new technological world, and design its laws to accommodate a much easier and freer flow of documentation that then links into online registries. Now, we've seen some movement in India with the development of online registries, but in my view, there's not enough. So I mean, I know that involves infrastructure, but I think attracting that investment into infrastructure to then develop those registries to make doing business easier is a must. Certainly, recent experience in the pandemic with localized and national lockdowns have meant that transactions have been a lot slower to materialize, and diligence that relies upon people actually going into an office and reading hard copy documentation. For many of us, certainly in the UK, that is a thing of the past. But unfortunately, in India, it's still a very current problem that needs to be overcome. The other thing I'd like to mention is that the M&A world is always developing, and we've seen over the last few years mergers and acquisitions have been helped by a product, an insurance product that allows sellers and indeed buyers to gain more comfort when buying businesses. And these insurance products, usually called warranty and indemnity insurance, they facilitate transactions. They ordinarily allow transactions to happen more quickly. In broad terms, they provide insurance for the warranties that are given by sellers in a sale and purchase arrangement, so that if those warranties are ever called upon, the insurance policy pays out to the buyer, as opposed to the buyer having to be concerned about going to find the sellers to make a claim. And these policies, certainly in UK, European and North American transactions, are now very frequently used. But the challenge we have faced recently on a transaction is the use of such policies in India. And it isn't so much that the Indian M&A market doesn't recognize these policies, but it's more about how the insurers and the underwriters are prepared to accept risk. And there are and remain certain areas around businesses that insurers will not touch. An obvious one is to do with warranties that relate to bribery and corruption, I think, and therein lies another area where I think non-Indian investors need to see more being done by India and the authorities to stamp out incidences of bribery and corruption, to ensure that there's a much better, first of all, regulatory and an enforced regime, that it doesn't just pay lip service to the challenge, but also we see that the regulations are similar in the same way as we heard earlier. Data protection laws follow a European model. I think what would give great confidence to external investors would be to know that bribery and corruption regulations were also meeting similar high standards.
Thank you so much for your response as well, Mr. Carpanini. And Mr. McCole, do you have any thoughts on the general challenges? Mr. Carpanini has already touched on high level of bureaucracy and the lack of clarity which foreign companies face when trying to conduct business in India. Do you have anything further to add? And in particular, do you also think that reforms such as the GST have somehow helped shape views that India may be an upcoming place to be doing business in?
Okay, thank you. Yes, both Fabrizio and Suneeth, I think, made some fantastic points in their remarks, and I'd like to build on them if I may. I think Suneeth talked about retrospective tax and the Vodafone case, and I think that's a fantastic example. If you look at Vodafone, they, I think, are the biggest foreign investor in India. They've invested over $20 billion in the last 14 years. Yet they have this challenge, and it's been with them now for almost a decade. And there is this opportunity now for the government of India to accept the international arbitration decision in favour of Vodafone. If the government does accept that international arbitration, it will send a hugely positive signal to investors all over the world that India will respect the rule of law and it will support major investors that come from any part of the world. So I think that's an important one. Suneeth also talked about the states in India and that variety of different rules and regulations. Now, of course, India's constitution, rightly shares responsibility for policy between the centre and the states. In a country as large and economically and socially diverse as India, that has to be correct, I think. And in the main, it does work. At the same time, though, it does create that bureaucratic challenge for businesses that operate across different states. It means that India is not one single market. And this patchwork of regulations means that companies have to view India as multiple markets. This is a challenge for probably every sector, but I'll just cite two examples: pharmaceuticals and alcohol. Companies in these two sectors have to navigate a patchwork of rules on price controls and on taxation, as well as labour laws that Suneeth mentioned. This all adds to the cost of doing business. And I know that this increased cost, this increased complexity has stopped and slowed down investment decisions into India. So I think as India looks to grow business investment to stimulate economic recovery as we bounce out of this COVID-induced recession, creating a more uniform regulatory framework across the states will really, I think, help to unlock investment. Fabrizio talked about India is getting easier to do business in India, it is getting better, but it's still very complicated. But I'm optimistic that we are on a journey to improvement. I was able this week to ask Commerce Minister Goyal a question about the ease of doing business during a CII summit. And he outlined, a fantastic ambition to create a single window that was genuinely a single window, not a window that businesses go through and then they find themselves in a dark room with lots of locked doors. So it was great that he was describing an ambition to simplify matters for businesses. He talked about companies only having to submit information once, and that information would be available for all government bodies to look at, so they wouldn't have to submit things 50 different times. Now, when Mr. Modi came to power in 2014, that ambition to improve the ease of doing business was there. You could think 6 years later that people were becoming a little fatigued with it, but actually I was quite impressed when Mr. Goyal showed a fresh and new ambition to keep making things better. A long way to go, a work in progress, but as long as the government keeps trying, I think we can start to see further improvements, reducing the cost of doing business in India, which will attract more investment into the country.
Thank you so much to our panel for providing the responses. I'd like to now invite the panel to provide their concluding remarks and also sum up the main points from today's discussion that they'd like the viewers to take home.
I'm so optimistic about the UK-India trade and investment relationship. And I talked then about the business-to-business opportunities, but I also think the UK and Indian government-to-government engagement this year in 2020 has had greater intensity and purpose than before. it really feels like there's a political will to reform and to work towards a trade deal. Perhaps this is due to the UK government planning for life outside of the EU, and that realisation in both countries that the UK-India partnership has got so much more to give. It's not achieved yet its full potential. And next year, I think we can expect to see the political and the business engagement go up several notches, not least as there could be 4 Prime Minister to Prime Minister bilateral meetings. You know, we already know that Mr. Johnson is going to be in India on the 26th of January. This will really turbocharge the partnership right at the start of 2021. And there are 3 other opportunities for the Prime Ministers to increase both the intensity and the ambition as we go through the year. In June, the Commonwealth heads of government are meeting in Rwanda for the biannual meeting. The UK is hosting the UN Climate Conference, COP26, in Glasgow in November next year. And the UK is also chair of the G7 next year. So the UK is going to be hosting a G7 meeting. And Prime Minister Johnson has invited Mr. Modi to attend that as part of a D8, which will bring 3 major democratic powers, India, Australia and South Korea, to meet alongside the G7. So I think these repeated top-level engagements will increase the impetus as our countries emerge hand in hand from this COVID-reduced recession. And you know, as Brexit becomes a reality, this is ever more important that the UK deepens its collaboration on trade and investment with India. So I'm therefore really optimistic about the future of the bilateral trade relationship, probably more optimistic than I've been in the last 15 years in which I've been working on the UK-India trade investment corridor. So thank you.
I think the way that I would sum up my conclusions come from my experience of being a lecturer during my spare time at the University of West London, where I lecture on private equity and mergers and acquisition. And given where the university is based, some of you may know that West London houses a high proportion, an extremely high proportion of Indian immigrants. And the students and the population of the students at the university very much reflect that. And my experiences over the last couple of years that I've been lecturing at the university demonstrate that not only do we have local students from India families attending the university, but albeit pre-COVID and hopefully post-COVID, a lot of students actually attending from India itself. And to me, teaching those students and interacting with them has demonstrated what I think is probably one of the key attractions for UK businesses investing in India, which is that India presents not only clearly much easier and straightforward language considerations, but also offers an able and skilled workforce. I think, without it being too much of a generalization, certainly when it comes to matters financial, when it comes to matters tech, it's quite apparent that students are hungry and very capable in those particular fields. And I think that's not just something that will benefit the United Kingdom here for those that choose to stay or remain here or are already here, but actually for those students that return to India, being able to impart the skill that they've developed and the knowledge to the benefit of India itself, but also as a way of attracting inbound investment, I think is a key feature.
Just to add to, and some of the things that they did allude to, particularly Fabrizio, is, there's so much history and culture that's common between UK and India. Add to that the fact that you're talking about the 5th and the 6th largest economies in the world, the potential is huge. And some of that potential, while it has been achieved in our investment world, and I'm happy to say that I keep representing so many clients that are investing and continue to invest in India from the UK. From a trade perspective, the potential to achieve is much, much more. I think we've underachieved there, to be honest. But the good thing is, therefore, there is so much more that can be done and should be done. As I mentioned before, a holistic approach, looking at things beyond just tariff, I think is the key to getting our trade partnership to be expanded. India is slated to grow at about 8.8%, I'm told by IMF, in next year, 2021. Even if we are at 7.5 or 8, we probably still be the fastest growing economy in the world. Therefore, naturally, we present a lot of opportunities. As long as this country continues to move in the right direction in terms of reforms, listen to the world in terms of the problems that they face while dealing with India, and take corrective steps to address some of those problems, genuinely address them, genuinely move in the right direction, I think we are in a great place, and I think we're going to achieve much more together. Thank you.
Thank you very much to our panel, and for taking time to talk us through their views. It's been a very informative and thought-provoking session, and it's also been very useful to listen to the personal opinions of some of the challenges that our panels have come across in respect of some of the questions that I asked today. I think it'll be fair to conclude that although there are some obstacles which India needs to overcome to enhance its reputation as being a viable business partner, the relationship between the UK and India is strengthening, as is evident in recent investments, and hopefully this relationship will continue to flourish and grow in the future. Thank you very much.